Okay, hello. So I had promised I was going to do a walkthrough or a recap sort of the trade that I took early in the week, and it was obviously, of course, a 1 to 15 trade. So, why did I take the trade, and what did I see, to inform my decision to take this trade, and also to hold all through the week, literally to hold, all the way. So let's just walk back in time. So to do that, I'm just going to take off. I'm going to take this off, right? We just know that, of course, this is 6.9 pips. It was a 1 to 5 trade. So when we get there, we're going to, recall all of that. But to walk us through this, okay, I think I should just leave this. Let me use this playground environment here. Okay, so here we have, you can see there's a 4 hour. We have the 50 minutes here on the right hand side. So let me take this off. So let's go to the 4 hour. So starting in the 4 hour here. So let's take this to when? To, okay, Tuesday. Yeah, it happened Tuesday. So Tuesday, let's take this here. Okay, so first off, let's look at market structure, right? Let's look at what we have here. Clearly, we can see that the market was bullish, right? And then the market turned. So bullish market order flow clearly has been playing out over time, and here you can see the market sort of losing momentum, failed to close above this high, pushed down, change of character, price returned again, swept liquidity, and then here we had push down and then failure, and entirely price changes bearish, right? So we can see the structure here. So this is a clear indication that the market is bearish, right? It would literally not be in our best interest to look for long trades, because the high probability trades will be the short trades, right? Of course, you can look for pullbacks, but that's not what we're looking at today. So basically, around Monday of this week, so I'm doing this recording on Saturday. So around Monday of this week, price, was basically consolidating around here. So we had this break of structure to the downside. Price had pulled back up, so price was consolidating. So two things were imminent. Price would either have to break to the upside, or price would break to the downside. Okay, and of course, for me, it was obvious that the market was trending bearish. So it was most likely, or it was most probable. I think that's correct. It was most probable, anyways, the price was going to go down, right? It was going to break to the downside, okay? And that was what I was interested in. I was interested in catching that move. And I knew that when that happens, that's going to be the move of the week, okay? So that was what I was looking forward to. Now, with that story, high time frame story in place, we can then go to the 15 minutes to see what exactly that turned out to be. But first, let's draw something here just to give this additional context. Of course, all of this is covered, of course, in the course, but just doing this for the purposes of this walkthrough. Okay, so here we have, let's just mark a swing, high and lows. I cover all of this in depth in the Stocking Profit course. So if you really want to know this, that's a place to go to. All right, so here we go. Having this, and then we have a low here. Okay, and let's take this guy here as our highest point. All right. Well, so this is not yet confirmed because price hasn't really, this area hasn't done anything yet. Okay, so we just well, let me just take it off. So we know this high was the highest point, that led to this break of structure here to the downside. Now, also another thing I need to explain, I think, why was I anticipating the price was going to pull back that much? Okay, ideally, if I catch the move to the downside, I should take off all, I should take everything out, all of the entirety of my volume here, right? Because that's ideal. But I decided to hold it all the way, beyond that, and there was some reason for that. Okay, now if you look at structure here, you see that we had unmitigated demand zones around here. Okay, that was unmitigated. We had this already, price reacted to this guy here, so you can see there's a reaction there, right? We also had what else? Okay, so I usually draw my demand zone from this guy, the last candle down, so the entirety of this area, basically I can see here that was for me a clear order flow, right? So this already, price has cleared all of this area, so I knew that now that we had this breaker structure to the downside, that price was most likely to be drawn to this area because this is unmitigated at the least. Of course, the market is currently trending bearish, so there's still room for price to really get to this area, but anyways, my target was just around somewhere around there. Okay, so we have this higher time frame narrative, and this is super important because if you don't have a picture of where price is at, on the high time frame, you literally just be all over the place, right? So you want to ensure that you have understanding of the high time frame, multi-time frame analysis, and in this case, of course, we're not even looking at the weekly, the daily, and all of that. So we're just looking at the 4 under 50 minutes, and that's I trade off the 4 under 50 minutes alone, okay? Plus the 1 minute, of course, when I really want to catch sniper entries and all of that at important critical pivot locations, right? But majorly the 4 hour and the 15 minutes. So if you have an understanding of the higher time frame, what price is doing on the higher time frame, it becomes a lot easy for you to be able to pinpoint where price is going to go, most likely to go. Not that price must go there, of course, but where price is most likely to go to, as a result of structure, right? So structure is very important. So when you understand that, it really helps, with your trade. So we've painted the high time frame structure. We know the price is bearish. We have seen multiple break of structure to the downside. We know the price is pullback, and now what we're expecting a continuation of the bearish move. Okay, so this is basically what we're expecting. This is high, low, pull back, low, pull back, and then what happens next? Obviously, what should happen next should be a continuation, right? As a result of market structure. Simple, right? It doesn't have to work, right? It may work, it may not work, but as a result of market structure, you know that the market always moves, it's a series of high lows, high lows, high lows, right? Whether it's bullish or bearish, right? So following market structure, that's what we anticipate. Now, the issue will be when, that move begins to happen, if you're able to catch that move, okay? And I'm going to show you, because I tried catching the move in the 15 minutes. The first time I took a loss, but then the second time I got it. Okay, so how do you anticipate that continuation, right? That's what we're going to look at, and that's what I traded for the entirety of the week, and I held on up to 1 to 15, and that was it for the week. Okay, so let's go to the 15 minutes and let's look at what we have there. All right, so now on the 15 minutes, let's see. So here on the 15 minutes, you can see the structure. Okay, so let's try and draw something in 15 minutes, right? Just so we have some context here. So I'll just draw this. So on the 15 minutes, this was break of structure, okay? And that eventually, okay, the break of structure, this was a high that led to this low being taken out, and then we had this low, and then you had a pullback again, right? And then another one here, okay? And then what else? And that was it. So the low was registered, and then this was the highest point. So if we just put our swing, oh no, not there, so let's put this here. Okay, so we have it there. This is a low, let's put that here. Okay, and then also the highest point around here should be this guy. Okay, so we're taking this, noting all of our swing, swing highs and lows, and so we have a pretty good understanding of where we're at with respect to price, right? So here we go. Let's put this here. Okay, so cool. So we can see here low, high, low, high, low, and then price now is ranging, right? It's sort of ranging within this range, this high and this low. So if I just take my flip tool, sorry. Let's just open that. Let's full squeeze that. Okay. So if I just take my flip tool, and usually I'll just take the low here, right? I'll just draw this to this high, right? So this is our premium discount area, right? So you can see the price is sort of dancing around this middle area, right? Price it's undecided, basically. Okay, hasn't decided where it wants to go. Now let's just go back to the 4R. Let me also draw something, because this is also very important. Now typically when price, right, we get this this kind of break of structure, pull back and continuation and all. So let's draw this. Let's draw our supply zone. So this entire candle, I'll normally draw it out like this, so you can see this entire candle. You can see that the candle is unmitigated, right? Price has not returned after the break of structure. Price did not get back to it, before the break of structure again. And this happens a number of times, a lot of times, sometimes on the 4R, that price after break of structure, price may not necessarily pull back all the way to mitigate the supply zone. That would happen. Okay. We also have this candle here, this high. I'll just draw that out. You can also see the price. So first, after price took out this low, price did not pull back all the way up. price took out this low, and price again has failed to pull back all the way up. Okay, now if I was to wait for price to pull all the way up to mitigate this before I find my entry, I may lose a lot of entries, right? And usually what I'll just do, you can see the premium discount tool here, from that we drew on the 50 minutes. So you can see price already is in the premium area, right? This the upper part of this area here. So what I'm interested in saying is, I know that sometimes a pullback may not necessarily mitigate the supply zone. So I'm willing to take a trade if I see confirmation that that pullback is coming to an end and the trend is about to continue. I'm willing to take a trade, okay, in the direction of the trend. Okay, now going back to the 50 minutes, let's look at what we have here. So you can see basically price is just sort of consolidating, right? Clearly. Now this is around 1:45 a.m. and this, for me, this is Asia session, so I don't trade Asia session. But let's draw structure here. You can see this is clear, break of structure on the 15 minutes, right, to the upside, right? If we decide to draw this last candle that led to that, okay, so you can see a lot of mitigation, right? Let's make this a POI 50 minutes, and I take this. Okay, so here you can see price failed to close above this candle. Okay, all of this was basically sweep of liquidity. So let's put that 50 minutes, right? So you can see all of that was just sweep of liquidity. Okay, now like I mentioned to you, I tried taking a trade on Monday. I think that was around it's Monday again, around London session, but then that failed, right? Because price came and swept that high. And how or the reason why I did that, let me just show you, because yeah, it's not all about wins anyway. So sometimes it's good you see this, so you know that sometimes of course you take losses as part of the game. So I had seen this was around 2 a.m. I had seen the sweep of this high, price failed to close above it, right? And then eventually I saw this change of character. You see this? So there was this change of character for me. So price swept this high, and then this low, price sort of changed character, bearish and all of that. And then you could see, you could see also, in addition to that we also had this low here. Okay, another confirmation of a change of character. Can you see this? Okay, so on the basis of this, I decided, okay, so now since I've seen all of this, I think, right, or I expect, not that I think really, because trading, not so much of thinking, just so much of following mechanical process. Okay, sweep of liquidity. So this was a potential, this area here, you could see price came, tapped into it, and then that led to this change of character in continuation eyeballs, not necessarily change of character, continuation eyeballs, that's internal eyeballs, right? So that led to that, and then price pull. So my expectation now, because this was already London session 10:15 a.m. on Monday, so my expectation was that this was going to hold, because I'd seen a sweep of liquidity, I'd seen a change of character, price tapped into that supply zone that led to a change of character, and that led to another internal eyeballs, and then my expectation was price was going to tap into this, and then we get that pullback. However, obviously, as you can see, that failed, right? Because price tapped into this area, and then swept to the highs again before trying to pull back. Now, two things, right? This was, for me, this was my entry. My entry was around here, like this. Okay, about 7 pips. That was my entry, and I was of course targeting the lows, the lows of the previous 4-hour low. Okay, and then price took me out. But anybody who probably wanted to sort of take the risk could have maybe used more pips or something, more stop loss, right, in terms of pips, and just so that they're in the trade and whatever, and you don't have it stopped out. But I had seen this order flow for me. I had seen this confirmation, sweep of liquidity, multiple confirmations of price wanting to go down, and that's why I decided to take the trade. However, it turned out to be a loss. Okay, full disclosure. Now, so that was my first loss for the week. But then I had to wait. So the entirety of Monday, I had no trade. And then when it was already 5, I wouldn't usually be looking for any trade. So I was off the market. Okay. Now, let's look at what then happened. What then happened on Tuesday? So 1:45 a.m. Let's take it to around 7:45. So usually I'll be, on the chart at around this time. Now let's look at what price has done. So clearly we can see here that price, let me draw this out, so you can see price failed to close above that area. If we draw that last candle, okay, let me just leave it here. Okay, so we can see the price tapping into the area and just pulling back and all of that, right? So if we look at this again, you can see all of this change of character on or in the 15 minutes, right? So let me just make this a little bit big so we can draw all of the zones. See that? Here we see the price sort of swept all these highs, right? Just make that liquidity sweep, right? So price sort of swept all of those highs. So 7.5, and let's see what price does, right? So cool, 8 a.m. Now that this was what I saw. Let me just draw this. Okay, just a sec. Okay, so yeah, so basically this was 8 a.m. Okay, and I saw this confirmation breaker structure, right? Now you remember we already have a higher time frame narrative, so I'm not jumping to the 4-hour again for any confirmation. I know that this is where the POI is, the 4-hour POI is, but price has failed to sort of get there, and you can see clearly that we're having some sort of loss in momentum. So I was willing now, let me just take all of this out, right, so it doesn't confuse us. Now I was willing to basically take that, when I see that change of character in the 50 minutes, okay, and I see all this confirmation sweep of liquidity, multiple change of character, the order flow basically showed the price was bearish. I was willing to take, that, trade. So when you look at this, already we're in the premium area. So that simply means for me that it was also high probability, right? So actually take that pullback, that continuation, okay? So for me, what I now did was here. So here you could see this was the last candle that led to that, right? That led to this eyeballs, internal eyeballs, right? So let me just put that there. So that was the last candle that led to that internal eyeballs. So for me, I drew that out. And then what I did was I took my short and I took that there. 6.9 pips thereabout, right? I think I need to be sure, but I think, yeah, about 6.9 pips. That was actually, what I basically put out. That was where I put my, my entry. And then my target, of course, was the swing, not just the swing low, right? So ideally now let me explain this. So ideally, this is actually going to be my my target, right? Ideally, because this is basically the swing low, right, on the 4-hour and also of course on the 50 minutes, right? Just an alignment there. So I was expecting the price eventually was going to get here, but I also knew on the 4-hour, let's go to the 4-hour. I also knew on the 4-hour, like I explained earlier, that there was every possibility for price to get around, to be attracted to this area, right? Because price was heavily bearish, and I knew that when we get that bearish move, eventually it was going to actually get around this area. So my target was around 1 to 15 pips. Okay, so let's go there. So here, okay, so so that was like 1 to 15. Where is that 15 there about? 1 to 15 pips, right? See, cool. So 1 to 15 pips. So that was my target, and that's of course a 15 minutes entry, right? So let's see how that played out. So 8 a.m. Okay, price returned. Okay, cool. So now this entry that I had here, so my entry was not exactly, so usually, and this is also something I need to explain, right? So usually my entry is going to be exactly here. Exactly, just at the entry with respect to this flip tool. So I'll just put my entry here. But for this entry, because now you get to a point where you just have some certainty the price was going to do what it's going to do. Now, two things. First off, I knew that there was every possibility the price can mitigate this area, and then we have that continuation, or price can even use all of this area as liquidity, tap into this area before we get that continuation. So I actually had two entries, one here and also one here, but I knew that we've already had a sweep of liquidity, so there was every certainty the price, there was every high probability the price was going to respect this area and then continue. So for my entry, I actually did not enter here. I actually placed my entry just below that level. Yes, I actually did that. And then my stop loss was now 6.9. So that was actually, how, I actually placed my entry. So essentially our profit was now 1 to 15. Yes, so that was target. So actually this was how I entered the market. Okay. And of course I'm going to show you that, to see that I actually took the trade, right? Yeah. So anyways, this was actually how I entered the market. So at around 9:30, I got tapped in, and that was it. Okay. Now you must understand that I knew that the most probable target for price should be this area, but I was willing to extract that 1 to 15 because I had the higher time frame narrative that allowed me to hold the trade for longer. So I actually held this trade, of course, from Tuesday all the way to Friday. So my target got hit on Friday. So let's see how all of this played out, and then I'm going to explain. Yeah, I'm also going to explain some psychology as we go through this. So cool. So you can see here that price came to that area, tapped into it and started pulling back. Now, was I threatened by this? The answer is no. I wasn't threatened by this because I knew that my higher time frame narrative was, most likely to be here. So I was basically just relaxed and watching what price would do. So Tuesday was coming to a close. Tuesday came to a close, and then Wednesday price was just doing its thing. You can see all of that. Wednesday morning, you can see price try pulling back but failed to do so, and then even pull back even deeper during London session. You can see that. Sorry, London, New York, yeah. And then price sort of now you can see price returned. So all of this was happening, and I was just sitting on my hands because I had the high time frame narrative. Now this was it. Thursday happened, and you can see Thursday came close, right? Came close, but then pull back again. Okay, now if I didn't have the higher time frame narrative, I would have been scared, right? The price was going to pull back or whatever. But I trusted my analysis and I held it. Of course, let me also mention this. I actually did take partials. Okay, I think I took partials around this area. I took partials around this area. So, and I left some of my volume anyways in the trade because price can do anything, right? So, and that was it. So Thursday, essentially, price did not hit the target, and then Friday opened, market opened, and price was just doing its thing, and then that was it. Okay, so Friday around 3:45, we hit our target, right? 1 to 15. Okay, and this was of course on the 15 minutes. And by the way, for me, I usually would enter when I get an entry like this. I usually would enter on the 15 minutes and also on the 1 minute. Okay, and I'm going to show you how I entered also on the 1 minute. Now, let's go to the 1 minute. So let's see what we have here. Okay, so let's take this. Oh, excuse me. Okay. So let's look at the 1 minute, right? So how I took the trade. I also got an entry on the 1 minute. So let's look at that. Cool. So here we are, Tuesday morning, right? Yeah. So Tuesday morning, this was around here. Okay. So we, of course, on the 15 minutes, we already had a continuation eyeballs, and then price was pulling back. Okay. Now how I got to this entry was here. So you can see here on the 1 minute, we had here. So going back in time, another reason why I actually took that trade on the why I took the trade on the 15 minutes was also because the 1 minute also showed me the price was sort of was ready to now pull back. So anyways, but this was it. So around this area, so what I had seen was, you could see here now, this is very delicate, right? The 1 minute entry is really very delicate, okay? Usually not everybody will be able to enter the 1 minute, and all of that. So, but anyways, this was it. So we had this kind of, price action here, pull back, up, and then break. See that? And then pull back, and that was my entry. Now let me explain what happened here. So you can see this internal candle. You see this white candle here? That's an internal candle here. Okay. So now what do you see here? You could see that price moved up, pushed back. Okay. Just this candle, this bearish candle here. You can see that price, what had happened here was price, POI, 1 minute POI. What happened here was price pushed into this area, tapped into it, rejected, and then broke, through that low. Okay, this candle, so broke through this low. So for me, this was confirmation for me. This was a flip, right? So we had a buy to sell flip, and this was confirmation for me. The price was really now and ready to sort of continue the bearish move, and that was why I had an entry here. So I usually take my flip tool from this flip zone here to the high. Okay, I also know there's a high here, so there's a possibility for price to sort of take out that high. So I usually will put that in my analysis, and then my entry was around here. Okay, so you could see that now I had to stop around here, 2 pips, 2.1 pips, but then I usually add 1 pip. Okay, 3.1 pips above this area. So I knew that if price pulls back into it, I should be pretty much secure. So I had this, and this was my entry on the 1 minute. Now on the 1 minute, because I knew the target on the 15 minutes was, the low was around this area, so my target for this was around here. Okay, it was also a 1 to 15 on the 1 minute. So essentially I actually took 2 trades. So one on the high time frame, the 15 minutes, which was 1 to 15, and also on the 1 minute, a short target zone, which was also 1 to 15. So 2 trades actually I took, running consecutively. I had risk, of course, different things on both, but this was essentially it. Okay, so this basically was how I was able to catch the 15 minutes entry. Okay, and also to get, you know, an additional 1 minute entry. So you can see the 1 minute halfway was just halfway was 1 to 15. On the 15 minutes was 1 to 15. So essentially, if I was targeting the same, if I was target the same target as this, that would have been 1 to 30. But this trade actually gave me the cushion to be able to hold into this trade, because I had already taken the loss from this already. So I had, you know, what it took to sort of hold this out for the entirety of the week, because if it worked out, then it's gonna be in my favor. So anyways, that is it. Okay. And that's the trade recap. So I want to believe this is something that's added to your understanding of price action, your understanding of market structure, your understanding of how to follow price, following simple price, you know, market structure, you know, and also just putting all the pieces together. And this is how I trade, and this is how I caught this trade. Hey, so that is it for me. Stay stuck in profit, and of course I have, you know, the course that breaks all of this down in more detail. So if you want to take part of the course, just look at the description section. I believe you'll be able to see the link, and you also see the promo code that you can use to get a discount on the course. So let's, you know, make profits together. Let's stay stuck in profit. So I wish you all the best. Stay cool, and cheers. Bye.